Welcome everyone to today's webinar, Step-by-Step Approach to Automating Your Control Activity Testing. This is with Rich Lanza. I'm Jim Kaplan, founder of AuditNet, and with us today is my colleague and friend Rich Lanza, an ACL and audit software expert. This webinar represents a collaboration between AuditNet and AuditSoftware.net in delivering training series focusing on audit software. We're glad you could join us. I'll be moderating today's webinar, and a little bit about myself you can see on the screen there. For those of you who don't know me, I'm the founder of AuditNet. Background is a chief audit executive, Internet for Auditors pioneer, and an auditor who believes and promotes the use of technology for audit. The next slide provides a little bit of information about AuditNet, and I'm not going to read that. That you have that in your handouts. But before, I'd like to cover the housekeeping items right now, and then I'm going to introduce Rich Lanza and let him give you his background. But basically, we are recording the webinar, and the webinar and its material are the property of AuditNet and Cash Recovery Partners. We are recording the webinar, and you will be provided access to that recording within 5 to 7 business days after the webinar. We do have an evaluation questionnaire that will come up at the end of the webinar. We kindly request that everyone fill out that brief online evaluation questionnaire that you'll see after the webinar. Your feedback is very valuable. Please take a minute or two to complete that survey. In addition, because the webinar qualifies for NASBA CPE, we will be putting up polling questions relating to the material covered in compliance with NASBA rules. The question period will remain open for about a minute or so, and it's important that you respond. You must answer all the questions. If you answer all the questions, you will receive your CPE certificate by email within 7 to 10 business days, and this applies only to the live session as we're unable to offer CPE for the recorded webinar. In addition, if you're joining us today from a tablet device, you may not be able to respond to the polling questions. You will have to just record your answers and send them along in an email, and we ask that you do that in one lump sum rather than individual emails. So record your answers, then send us an email with all of your responses. Some technical items: if you're having problem with the webinar software, check to see if Java is enabled and whether you have any pop-up blockers disabled. If you're still not able to get into the webinar and get it to function, log out and log back in again. If you can connect to the webinar and the audio portion but get kicked off at any time, reconnect using the same steps you used at first. The next page has a disclaimer, and again, I'm not going to read the disclaimer. Basically, that covers the fact that Rich Lanza, these are his views, his positions, and not necessarily the opinions or views of AuditNet. And Rich may have some additional disclaimers that he will give you, but at this time I'd like to turn the floor over to Rich and let him introduce himself, go into today's agenda, and get right into the subject matter. Rich?
Great. Yeah, thanks again, Jim, and thanks again, everyone, for coming out here today. We have about a 3-hour course here devoted to automating control activity. And this has been almost like a small enigma for me to be able to automate control activity. It seems as though data analytics, especially, and Sarbanes-Oxley testing don't tend to go together, and they should. So, you know, all of my experience into doing this work, I've had kind of lackluster results in the control testing area. But with that said, you know, I'm trying every day, and as you'll see from the work we have here and the files we'll be sending along, there's a lot here to work with. So, you know, hopefully you will gain a lot of steps from where I've kind of gotten to down that pathway. I've written a variety of books and used products like ACL, Active Data, and Excel for a number of years, in some cases over 20 years, and again, we'll bring all that experience to today. As we go into the learning objectives, I'm not going to go through all of these. These were in the bio. It kind of takes a while to go through it all, but you know, in general terms, I wanted to talk through the process of identifying controls, breaking down an audit program, walking through how you can automate these tests in Excel, integrate user testing. We're going to start out with that discussion and kind of see pretty quickly how we can kind of get down to that level. The next thing after that is we're going to talk about some data analytic testing and more or less just giving you an idea of the variety of data analytic tests that are available to you, the processes, etc., that go down that road. And my reason of doing that is I want to kind of show you the control side of it. I want to show you the data analytic and database side of it, and then put it all together. After that, we're then going to talk through a very detailed audit program and something where I've done my best to try to map the controls to data analytic tests. So we're going to spend a good amount of time with that document, how to use it, how to expand on it, and most of our areas, like most of our discussion today, will be in the accounts payable and general ledger areas, as noted in the course, but we will be able to expand it to lots of areas. After that, I always like to include cost recovery into this work because I find any sort of control testing and other types of testing that you're doing, it tends you try to want to save money if you can, or at least have audit findings that will help the company save some money. So cost recovery, I like to kind of weave into that, and that will be part of the next section. As we continue onward into more detailed things, I'm going to talk about transactional scoring so that you can really improve your control tests and the sample that you pick, as well as looking at your general ledger in a very detailed way so that you can really start to understand where there might be opportunities within the general ledger for fraud, but also to just understand what is being processed through your company. Last but not least, I have a bunch of freebies and things that you're going to get, and files and Excel macros, and I wanted to spend some time just explaining what you're going to get, and we'll probably spend about 10-15 minutes even going through all that stuff because there's a lot that you'll be getting. And in addition to this course, the 3-hour course, you will be getting 6 hours of videos that you can watch. They're online. But these videos will expand on the course that we're giving today. So like the cost recovery section, I think we're going to talk for maybe about 20-30 minutes on that at the most, but I have a 2-hour course on that topic, so just giving you an example. So that's kind of the 3 hours in a nutshell. I didn't want to go through everyone in total detail, but hopefully that gives you a good idea of where we're headed today. I came up with this picture a little while back to be my best explanation of what I'm trying to do with analytics, and I think it still holds pretty well. The goal of it is to show that internal audit, in this case, can maintain a data mart that has a variety of very good information in it: general ledger, inventory, payroll, accounts payable. And using that analytic toolkit, you can run a variety of reports from a control, cost recovery, fraud perspective. And probably the analytics that we're going to run are going to be more advanced or beyond what someone might want to do at the local level, the shared services level. So usually what we're doing is we're passing some of the tests down to them to run, but if we're running say 30-40 tests, they might run 1 or 2 down at their level. And I find this in accounts payable where internal audit will run 20 different tests, and the actual local site might just take a look at duplicate payments as an example. With that said, though, there's a lot that could be learned from those teams, and that information and feedback should be sent back to internal audit so that you can improve on your data model and improve at what you're looking at throughout. So, I tried to show the relationship of everyone, how it all fits together, and what I wanted to kind of start with the end in mind, because this is sort of, in my mind, the end stage, and now we'll talk through how to get there. So planning analytics into control testing, and really it's the focus of today. So obviously, I could talk about all these different data analytic tests we can run and show you how to run each test in Excel, and but there's other courses for that. I think this course is really trying to show you how to model your controls to analytics. And just some of the other pictures that I've had over time is, this one was trying to show that, like, no matter kind of what audit process we're doing, we usually follow this process. So if it's testing controls or financial balances or looking for fraud, we set objectives, we gather information, we assess risk, we then assess controls that mitigate that risk, and we do our testing of those controls and identify and fix issues. And nothing really changes there in the automation of that. I just think that the testing part, gets a lot better. And I think that the identifying and fixing issues gets a lot better. Okay, so categorically speaking, what I wanted to then kind of back up and say is there's a lot of technology that can assist this process here. I mean, it can help in the assessing risk part, the controls part, testing, etc., setting objectives. Probably helps in all of them. And per a book that I put out a long time ago called The Buyer's Guide to Audit Software, these were the ones that we came up with. There's a risk management component where you might have a database of your risks and controls. There's a work management component which is going to manage your work papers and things like that. There's a data analytic, a continuous control monitoring component that is going to focus on, obviously, running your testing. We included text searching as a separate one. I guess it could be a data analytic, but I think it kind of has its own separate piece. And then research and benchmarking, which there are tools out there. I mean, obviously, AuditNet's a great tool. Other products out there like Audit Analytics, which gives you, analytics on other public companies and basically what they pay their auditors, what types of control findings they have, etc. That type of research is interesting when you're looking at an industry and saying, for our industry, what are the top control points that are coming up on SEC filings? So, all of these things are automation that can help set those objectives, gather risk, assess controls, test, etc. A lot of my focus is on the data analytics side, so I'm going to kind of focus there, but I did want to mention that there are other components. And you might want to say, from a risk management point of view or a work paper point of view, why switch to a database? And obviously I'm a data analytic person, so I think everything should be put into some sort of a database that you could search. But by putting your risks and controls into some database, that is an automation of this process, and it does help. It helps maintain consistency, build that company list of risks and controls, helps you remove duplicative controls because now you have a database and you're kind of looking at it a lot better than having it all live within Word documents around the company. You're kind of reducing testing non-essential controls because you're able to more quickly, gather where the key controls are, assess it across companies, so it's really, you can do a lot of data analytics once you switch to a database for managing your risks and controls. And there really is gold in that data. I mean, when you look at all the data that's out there in a company, and just like I'm saying here, where we could automate and provide data analytics on a risk assessment database that has all your risks and controls by company and saying who does what. That is one of the components. You could see it in the wheel here, but also your audit results. I find it's very interesting to go in a company. First thing that I'll ask is, where are your past audit reports? What do you normally look for? What do you normally find? And we can, really exploit that with analytics. There's control self-assessment, whistleblowing hotlines, ERP data, computer logs, etc. And there's just a lot that you could look at. So where are you using data analytics? We did a survey, Jim did a survey with AuditNet, and 2012, I think there's like 1,500 people filled this thing out. And when you looked at it, general ledger and payables was really what made up the bulk of it. And that's why I'm talking about it. It tends to be an area I just figured that would be the most comfortable for people to think about analytics. So we figured, we'd start there. But it is interesting to see that there is this other component where 50% of people are looking at just other things. Now, in planning data analytics and planning control testing, I'm just going to the audit standards. Now, this may not be the best place to go for some of the control testing you're doing, but I wanted to at least, do the work that I normally do, is just go back to some of these audit standards. And, the first standard of field work really states, you have to adequately plan the work and properly supervise assistants, and the second one is the auditor must obtain a sufficient understanding of the whole entity and environment, internal control, assess risk, etc., all this great stuff. But without analytics, I don't know how you really do that well. I mean, I know there's inquiry and there's observing a few transactions being posted in a system, but it leaves a lot that wasn't looked at in that process. I mean, by using analytics, you can start to look at an ERP system and find every instance of a person who was paid after their termination date, not just one or two that you might stumble upon. So again, you could kind of see where analytics could be written into some of these standards. So this is where there is some mention of it, at least of data analytics being put into standards. And really what it's saying is, if you can't bring your risk down by testing it and understand that area well enough from the manual transactions that you might be looking at, you really need to kind of get to the electronic form of that evidence and start analyzing it, and that's kind of where analytics comes in. Again, not an expert on all of these roles, but I know some of the rules out there from even the IIA in some of their standards, and obviously all the white papers that they've put out, which I've helped with a few of these, which in essence point to the fact that auditors really should have a sufficient knowledge of this technology and be using it. So, I mean, it is supported. It might be a little loose in how they're supporting it, but it's definitely a supported area, even within internal audit standards, to say we should be using this. And it kind of gets to, is there a malpractice if we're not using it? Now, I wrote this article a while back. I think it's back in 2007, and I was going to say since then, I think some better things have been done, but going back that far, you really start to wonder, what is a reasonable auditor expected to do in the field? Are they expected to use data analytics? Well, if you start looking at some of the standards that are out there, some of the white papers that are helping to kind of bring people to see the light of it, etc., it is starting to become more and more of an expectation versus it being a nice to have in that particular audit. So, I kind of pointed to a few of the cases that revolve around negligence and malpractice, and kind of highlighted that in this article, which you can get at that link. Now, what I found promising was that I believe since that article, the PCAOB put out Audit Evidence Standard number 15, and I kind of like the selecting all items part that's there. It's not always needed, but this is a little fuzzy, but tried to kind of blow it up here. It said, selecting all items refers to testing the entire population of items in an account or a population of occurrences of a control. The following are examples where that might be applied. A small number of large value items. The audit procedure is designed to respond to a significant risk, so just a few items isn't going to help you when you have a significant risk in an area. You really need to look a lot further, and I do think that a lot of this testing can be automated much more effectively, for sure, and applied to the entire population. I mean, that really leaves it open. I mean, I think you could argue that every test could be automated and probably done a bit better through automation, but again, I think my reading of that is it's something where it's easy, it's efficient, but also effective. But again, I think the efficiency of this testing, I think the technology has advanced where it is a lot easier to use these tools. Even just in Excel, what you can do today, it's making it where it's hard to argue that you can't do it. So again, I wanted to show you some of the guidance out there on this work, and these are just some other kind of further details of some of the things that you might perform. Such as observing or confirming, which you can automate confirmations with banks these days if you want to. It's all automated. You could recalculate, obviously, reperform steps. A lot of this can be done with automation, so it's definitely something that could be used. When we think of other testing beyond like the substantive testing that we had here, like observing, inquiry, confirmation, things that you would do in a control test or in a test of a balance, any of that you would do. You also can run what the AICPA calls analytical tests, and this is what is per the AICPA guidance on this, where this hasn't changed for years, but a lot of it is trending, ratio analysis, reasonable testing, and regression. I don't see regression used very much, but the first three are great analytical tests that you could add on to your normal substantive procedures, and it really does help you to recalculate things or better observe the population by running these analytics. So again, just wanted to give you some of the guidance first, and with that said, I'm going to launch our first polling question. And that is, what is not one benefit of a risk management database, the database that manages all your risks and controls? Maintain consistency, increase duplicative controls, reduce testing of non-essential controls, identify areas for continuous monitoring. So which one is not a benefit of a risk management database? And this is a good time if people do have questions. I normally kind of give these classes with some video, some live, where I'll play a video versus even talking. Today is going to be fully live, so I do answer questions at the breaks, though, if anyone has any questions. We do appreciate you filling out the polling. It definitely is something for your CPE certificate compliance, but also it just kind of keeps us on track here. And since everyone voted, I'll share those poll results, and 91% are correct. Increased duplicative controls. I find the database helps you to reduce the duplicative controls, so that's a really nice benefit of that. So let me hide that. I notice there's no questions yet, so I'm just going to kind of carry on here. But as questions come up, feel free to post them to the questions box, and I will respond. Okay, so as I said, I wanted to first talk about control testing, kind of some of the theory that I understand behind it, and how analytics could fit into that. Now we're going to talk about the data modeling and just my basic approach, I guess, or overall strategy of how I like to run analytics. And what I find is this is usually the process that I go through if I do it right. Sometimes I rush in and immediately start getting data from a organization before I set my audit requirements. And really you should be kind of setting your audit objectives, figuring out what reports you have and aligning those reports, setting some of the data requirements based on those reports, like what data do I need based on these reports, validate, normalize, obtain that data, edit any scripting that I may have done in the past, and then run the reports. And I will talk more about some of the best practices when we're going through this process, but I think the key here is kind of figure out what you want to do first and then go get data and then run it. You're going to have a much better result than just kind of jumping in. With that said, continuing on here, hold on. Now that we figured out we want to run some reports, or we have some audit objectives in mind, what I like to do is think of the who, what, when, where, why, and consider it from a few different perspectives. So I'm going to talk through each perspective here. There is the direct control type testing, which is testing something like a duplicate payment control works. The system that they told us that there's no way you can enter in a same invoice, same vendor, same amount. I then run a report. That's same invoice, same vendor, same amount. and see if anything comes out. If it does, people will say, how is that possible? And we'll look at it and usually find, like in the invoice number field, a person can add a blank space, and a blank space will make that invoice number look unique. That would be a way, to kind of get around that control. But by testing that control, we're able to then determine what are some of the control circumvention techniques that people are using, such as the blank space technique, or putting a dash in there or something like that. And that's kind of how we start thinking about control circumvention testing. So, again, using this who, what, when, where, why theory, and we'll show the detailed reports in a second here. What we do here is we think first direct control, and then, start thinking like a thief and thinking about how a person might break that system. Another example might be the approval limits, where you know that you have an approval limit, it stops at a certain point. We could do a lot of testing on what's happening right below an approval limit, as an example, and that would get into the control circumvention. From a query and data mining point of view, I'll explain that in a second as we go through this, but querying is asking questions, data mining is just kind of looking at the data and seeing if anything jumps out at you. So maybe summarizing it by when, or summarizing it by who or what, and just seeing, wow, that's odd that Rich has all of these transactions posted when we didn't think Rich worked in that department. So I don't have a specific thing I'm looking for. It's just more as I look at the data, some things kind of call out to you. So, specific tests based on the 5 Ws, and these are going to be, a lot of these are going to be more of a query nature. So they're questions you're going to ask of your data. So the who questions are, who's entering the information into the system, who has access to the system but shouldn't because they've been terminated. These are all questions in the who area. The what area is just even understanding, what data do we have here? What are the manual journal entries? What is the size amount, generally speaking, of those entries, etc. In the when category, when are things happening? Are they happening on a weekend? Are they happening prior to year end, like just prior to year end? Is it just by looking in a day, month, year perspective, are there patterns that are kind of kicking out that, might be understandable based on the business? If there's a large kind of holiday season business, you'll have a lot more probably towards the winter month activity. From a where point of view, you might be looking into, where there are accounts where there was past, bad performance in those areas, and now we're kind of taking a look into those areas more specifically. So we kind of have a condition that says if anything shows up here, take a look at it, like a suspense account or what have you. And moving on here in the why section, I didn't really know what to put in why, so I like to look for weird things here, just things that I would expect to just be strange, like net to zero or plug being put into an entry. Actually a journal entry that doesn't net to zero in this case. Items that are above an average amount, or they're in round multiples. It's just like weird stuff. It has no exact kind of place to go, so it kind of goes into the why category of kind of why does it look strange. So again, I'm asking, looking at this little image way at the top here on the left, again, we're kind of asking all these questions in a query type format, and some of the controls, are more focused on the direct nature, some are from a control circumvention nature. Then what we do is we get into just summarizing things, and it's more of that who and what and when, as you can see here. So personnel analysis is the who, taking a look at things, maybe just processing by employee, but I like to look at adjustments that people are posting, because adjustments can kind of tell you a lot about where a person is maybe making a mistake, or there's some issues happening because they are making a variety of adjustments. I mean, systems don't normally need adjustments, so what you would kind of assume here is that if you have adjustments at all, that there might be something wrong there because of that. So that's something to look at. I always like to look at transaction types. I find it's a very interesting way of you know, looking at what is going into a particular system. So that's something else to kind of consider. And time trending, as we said before, maybe just some other things is, you know, maybe just the last month of the year to the last 11 months, or maybe doing a quarter-to-quarter type analysis, or transactions that are, you know, really at the right end of the year or at the beginning of the year. These are all things that you know, I would put into a time trending, but also would just be kind of useful for us to understand. Okay, so moving on here, just some other kind of Benford law type things which I like to look for as well in my, you know, I guess this is the why stuff, so it's not, you know, the who, what, when, but just why is this happening, is, you know, why do we have certain amounts that are happening over and over again? You can pivot table, we'll maybe try to show you this, but you can pivot table in Excel the amount field and try to get a sense of, you know, why is this number happening over and over and over again. And I just find that that can be an interesting way of looking at your data. And just kind of going back to this original slide here, just kind of going back to this, the whole goal of this cube in my mind is to try to get as comprehensive of a view of your data as possible from a control point of view. And I find that the who, what, when, where, why, you know, it allows us to brainstorm a little bit better. And from a query point of view, you know, there are a lot of test ideas out there. I have books on it. Other people have books on it. So you can get lots of ideas of what query tests to run. The data mining part, where you're just summarizing things like by amount or person or whatever, that's where I still think that, you know, things kick out, but it doesn't specifically relate to a control. It's probably used more in the risk assessment phase of that organization to determine where you should be doing your testing and what controls to take a look at. So again, digital analysis. Mark Negrini has a book out there, Forensic Analytics. Mark has, you know, joined us once before at least on our webinars. Great guy, really understands Benford's law, and just, you know, kind of we'll talk a little bit about Benford's later today. Okay, so. The other thing that I like to do then is, as we're doing this data mining, and even if we're doing control testing, I like to use our charting, even to kind of show, you know, how many times do we have a bad occurrence of a control to how many times do we have a good occurrence of a control. Even that stuff can be graphed and should be. These are the common types. I think I'm not going to go through them in detail, and I imagine, you know, most people know what they are. The column, the line, the bar, the pie chart, everything has its own little way of showing things. But, you know, what I think is, you know, the scatter graph can be just a great way of showing value and volume. Something where I kind of, all of my charts here, I find the scatter graph is a great way to get like a quick overview of all of your data. So kind of with that said, I'm just going to kind of open up a couple of things here. And I'm just going to drag these over here for a second. Hold on. So we'll just now, we'll jump into Excel. So we have this now. We'll look at this one later. So in the payables pivoting, one of the things I mentioned there was just looking at amount. So what you can do, let me just kind of bring that into the row labels. What you can do is create a pivot table of your data. Again, you know, very simply here, insert pivot table. It usually highlights all the data. You then click OK. And then what you can do is drag the invoice amount field down to the row columns. Then I would drag it again, but this time we're going to drag it into the values. And instead of the sum, I'm going to change that by clicking on that down arrow, value settings, and I'm going to go to the count. Now, it's a lot here, but I can click on anything here, and I could sort this high to low as an example by just clicking on these buttons, clicking on that amount there, sorting high to low. And if I want to look at the details of this, I can double click and I get all the $19.42. But this is a great example of, again, not knowing what you're looking for, but just analyzing data and saying, why do we have so many $700 and $2,000 and 1942s? To take the top 10 of these and do a little bit of an analysis of why is this happening, I think is an interesting way of gaining, again, an understanding of your population before you do your very specific control testing. And again, another chart we were talking about here, bear with me, not that yet, was the scatter graph. And the scatter graph kind of works in this. Let me just kind of show it to you in the final version here. One option is to kind of take a look at year one and year two against one another. That's always very interesting. And what I have here is value on one axis, down here, and volume up here. And again, without getting too deep into the details of making these and all of that, I think it's more or less when you're inserting a graph, you're going to insert a scatter graph to the data that you have. In my particular case, I do have kind of my year one count and amount, year two count and amount here, and that is then scattered to here. But it really provides a great perspective of that value and volume data, where you're able to not only look in 2 years, but also see the relative nature of, I'm going to say I probably am data pointing about 11,000 items, because I have 2 years worth of 5,000 items. And of 11,000 items, there might only be as I insert a shape here, there's probably only a few that I'm really looking at, like maybe 50 or so that kind of start at say the 30 or 40 million mark, and those would be the largest items that we could look at. Again, by looking at the relative nature, especially year on year, you can really start to see how year two is a lot less than year one in this case, and again, there are other things and selections that you can make. Let me close that down. So kind of heading back on the graphing side and the analytics side, again, just trying to show as quickly as I can kind of an overall process of analytics. We went through kind of an overall process of controls and now this overall process of analytics. Other graphing that you could do is mapping it. I always find it really interesting to map my data. I've had one company that said, I didn't know we were doing business with that company in XYZ state. Is that where we're doing business again? Because I hope we're not doing business with that vendor. We've tried to blacklist them. We don't want to work with them anymore. And sure enough, it is that vendor that people are working with again. But for some reason, they needed a map to tell them that. They probably could just sorted the data high to low or something and found this. But by putting it on a map, people are able to see things. What's really cool about things like MapPoint and Google Earth is that you really can drill down to a microscopic level almost in imaging of that location, but also in just looking at patterns of why certain towns might have a lot of activity and et cetera. So there's a lot, even just looking at payroll and where your employees live and doing a small study of where people live in general terms from a benchmarking point of view can be a very interesting and useful thing to work on. Other products out there aside from MapPoint are BatchGeo. It's a kind of a website that you upload your data to. It's a little weird in that way, but it does a really nice job of then mapping your data for you, throughout the world basically. And one chart that I wanted to kind of go back to is this slide here, slide 33, and what I'm doing here is going beyond just looking so much at I guess, data itself, but really trying to looking at it in different ways. For example, maybe taking a look at the income effect of journal entries and summarizing the income effect of journal entries by the account type, by who's entering the entry, and by what department or what company. So, I'm starting to look at general ledger entries and saying, why do we have so many entries that are being posted by company 123 that have a high revenue income effect? It's like a positive effect on the income statement. Again, can be very useful analysis. I also do things like net amount, absolute value of amount, but I'm still kind of stuck in a lot of this analytics here in just taking a look right now at understanding my data as best as I can so that I can apply very, very specific testing to the data once I have a good understanding of it. Okay, so just maybe concluding with some other kind of best practices of automation and this data analytic process that I'm talking about here is, first off, as best as you can, get your process down first. It's kind of like why I say get your audit objectives laid out for you first, and then kind of work to getting the data, etc. You kind of want to figure out what you want to do first. We will talk a lot more about this later, but I'm a big believer of automating and getting cash return initially before I spend a lot more money on technology. So try to automate as much money out of the tool as possible from the get-go. Keep training people. I mean, it's great that people are on the call today and training up in these areas, but I find that it's more of a minority than a majority of companies, employees are doing this type of work, and so it's still something of a science that less people are doing. So there's great opportunity, usually at a lot of companies to do this work. Integrate the data and make it routine. As much as you can automate that process of kind of getting your data into the tool and running it so that you can get it into more of a routine fashion, the better off. I find most people spend their time in getting data and getting it into the software tool. If you can automate that process, make it a push button, it saves almost all the time, in these audits when you look at them. In a more detailed kind of way, let me just go to this next one. So, taking this more summarized list of best practices when you're automating your control testing and getting more specific now. Automating the data import and normalization process, again, I use a lot of Excel macros, one of which I'm going to give you today that will combine your spreadsheets. I can't tell you how many clients I work with that I get their general ledger and they actually hand me a monthly general ledger run. So they have, April 2011 to date, and it's one a month. So you have like 40 files that you have to put together in Excel, which takes the better part of an afternoon. I have a nice Excel macro. You push a button, puts them all together, does it. You'll see it does a nice summary of it, etc. Again, reducing a task that no one wants to do for probably 3 or 4 hours with a quick macro that you can push a button with saves us all a lot of time in the process. Reducing false positive in those final reports by using scoring that we're going to talk about today, you really can make what you're doing much more efficient. You're training people in the process because people are really thinking about how the test is working, how the report's working, and again, really trying to kind of think into the analytic more so it's more tailored for the organization. And then documenting, saving, videotaping your work plan. I do a lot of video work with this product called Camtasia. There's other products out there. There's flowcharts. There's audit logs that IDEA and ACL and even Active Data put out for you. So there's just a lot there that you can actually pull together and from a documentation point of view. So again, just kind of giving you some of the best practices in a general and more specific way. And at this point, I am going to go into our next polling question, but just kind of noting again what I've done so far in this first sort of, I would say the first third of the course that we're doing today, and it is in essence going through the control testing and what is kind of controls, and then the data analytic process and what is that, in my perception of it. And then now we're going to talk about putting all of that together. So we'll spend more time. But first, what is the polling question? What comes first in the data extraction process? Request data, set objectives for the audit, set report objectives, or validate data? So most of you have voted. If the rest of you could vote, this is a great time for questions. We will be taking a break, a 10-minute break, and actually after the next section, so probably at like the hour and 15 or hour 20-minute mark. And I try to do it like right about halfway, of the course, where we take a 10-minute break. If people want to go to the restroom or get a cup of coffee or something, it's a great time for that. So most of you are voted on this. I don't see any questions, but again, feel free to post questions as we go along here. And I'll just leave that open for another 10 or 15 seconds just to kind of get the polling questions done. Okay, well, I'm going to close the poll and share that with everybody. And the majority got it, setting objectives for that audit or setting report objectives, which, quite frankly is, a good second guess there really, are both very close to the right, the right answer, in that you want to figure out what you want to do first before you run in and get data and validate that data. Okay, so I'm just going to wait for a second here to see if there's any other questions that might come in, and then we will kind of continue on here. All right, well, let me carry on here. Sorry about that. Okay, so now we kind of get to this point of mapping the two together. So, the final point of the course. And in doing so, I'm going back to another book I wrote, The Payables Test Set for ACL, where one of the goals of the book was to write a bunch of ACL scripts, but the other goal was really to think about, where do those scripts work towards our audit questions. So if I have a bunch of audit questions, how do the scripts relate? So we did our best here at, trying in the audit questions that we're asking to kind of map out the particular scripts that align, or testing that aligns to that. Again, nothing, this was not very detailed, but we did have a lot of questions and such that you're not seeing here that we went into. Again, I think the goal of this is really to start thinking about how can we turn a one-day test that I'm going to do manually into something that I could run in 5 minutes, and once I script it, I don't have to ever really do it again. I just push the button and it kicks out. So, as much as I think it's a lot of just creativity of thinking how can we align testing to the data analytics. I never want to forget about fraud in that process. So as much as I have my audit questions, a lot of times fraud is not really so much a question you're asking. I mean, it's hard to kind of know what someone's going to do to commit a fraud. So it's difficult to really know like which controls are failing, and the combination of those controls led to a fraud. But I as much as I do control testing, I figure while I'm in there, I might as well run some of these fraud tests as well and see if anything kicks out, because in a lot of ways, by testing for fraud, proactively testing for fraud, we are controlling it, in some way. That in itself is a control in some way. Okay, so these are all the different types of fraud. a while back, probably I think it's about 10 years now, I think, I wrote a book for the IIA proactively detecting fraud using computer audit reports, and it was a research paper. You can buy it online. I think it's like $40 or something. It's pretty inexpensive from the IIA. Again, a research paper, I don't get anything from it or anything like that, so it was just as a note. But with that said, the reports, what I did was I took all of the fraud categories from before and I align to it all the reports that relate to that category. So, something of the nature of payroll fraud and falsifying your hours or your salary, I then broke down to, you could calculate the percentage of bonus to gross pay on a person-by-person basis and sort from high to low. Do the same thing for fringe costs and overtime and, et cetera. And all of this is to try to find, whether or not somebody's committing a fraud in the hours area, as an example. And I did my best. I spent about a week working on it, which is kind of funny, but I had all of these sources of data to pull from. It wasn't hard to do. It was like I had so many of these reports. It was literally just a matter of kind of mixing and matching. And in doing so, came up with this document, and it's not a bad one in being like a brainstorming tool for you to think of the various reports that you could run. I also want to note at this point, as always, that AuditNet is a great place to go for this type of activity, something that, with all of the audit programs out there, I've learned a lot from them, and the things I'm about to show you, much of that probably could be traced back to AuditNet in some way. So, again, I think that that's a great source as well to kind of help you to research and benchmark what are other people doing, and what could I be doing in this particular area. By taking all these reports, it ultimately boils down to a Word document, usually. I think at the end of the day we have our Word documents and our Excel documents, and in doing so, by bringing it down to this Word document level, we're able to start organizing things. So in my case, I've kind of organized all of my questions and reporting and testing into these 7 categories. Purchase approve, it's kind of the procure to pay process for accounts payable. Purchase approval, vendor selection, receipt management, invoice processing, payment control, they're all those steps in that process. And from that Word document, it then, in my mind, became an Excel document. So we're going to talk a bit about now how this Word document and this Excel document kind of come together. All right, so I think most people are pretty used to seeing something like this where, we have the Word document, has all those categories we just talked about. I go into some data analytic parts down here that we'll talk about as well. And I don't think I can click on that, right? Nope. Oh, maybe I can. No, I can't. So with that said, we'll look at some of the things here, but just taking a look, say, at the purchase approval process, what are the questions that you might ask in this area? And again, we'll talk more about how to align data analytics to it in a second here. But it's the basic stuff, right? Who is able in the organization to procure goods? Is everyone able to? Are there just director levels? Who has that ability? And for any policies that we have, do we have written code of ethics? Do we have policies around travel and entertainments? These are all kind of, a lot of this being more of an inquiry. But if you can find these policies, it's a great thing to take a look at the policy to what's actually happening in the data. Again, is it a specific key control test? No. Is it a way to learn about where people may be playing games with approval limits or conflicts of interest or what have you? Absolutely. So, it's something where I think there are value to kind of looking at these questions and thinking about reports you can run regardless of whether or not it's going to help that one control test that you're working on today. With that said, there's then lots of control tests that we can run with regards to one-time vendors, taking a look at that, maybe taking a look at certain categories of spend and whether or not we're working with preferred vendors. taking a look at the vendor information itself. Let me just head down here. This was, I think, the vendor selection and management section. One good thing here is do we get addresses for every vendor, and just taking a look for blank address vendors as an example is a great way. Taking a look at the accuracy of the entire vendor record entry. Are there various things that are not filled out for that particular vendor that might make it concerning? Okay, so various other questions all around controls. From an invoice processing point of view, probably some of the controls around duplicate invoices is always kind of an interesting one to look at. From a key control point of view, if I haven't touched on this yet, there will be some segregation of duty tests that, so how does one in accounts payable know that the authorized person properly approved the invoice? Is it approved in the system? How do we know who can enter invoices, and is that managed back to a list of users who can enter invoices? These are all these tests and questions that are asked. So I don't want to go through every one of these because I just think it gets I don't want to say monotonous, but I think a lot of these tests, so you don't want to do it here, but I will be talking soon about how data analytics will support that. As always, I kind of note here at the end, even though I have my specific questions up top there, I then kind of have my listing of tests that are just unusual. Again, the unusual stuff, the why type stuff that you might have that fall into why you might want to take a look at these items and kind of change some of your control testing accordingly. All right, so that's it in a Word document form. It's not that useful, in my opinion, in a Word form. Like it's kind of good to read through it on a web call, but as a practical testing aid, I don't know how much that is. I would say kind of moving into the Excel version of this. Let me just bear with me here. So what I did was I took all of those questions that we were asking, so that was the control activity description, and then tried to put that into this type of document so that we could align different tests to the particular item here. So let me try to get you a couple of good examples here, but let me also kind of show you how does this schedule work. So let's maybe do that first. This has a listing of all of those questions as we just talked about. I've even kind of numbered it, and I question if all of them do not have data analytic tests, as you notice aligned to them. The data analytic tests show up over here. So the mapping that I use in between there is this lookup column. So the lookup column allows me to enter in a number here and to kind of get a report number here based on that number. So if I enter in 48 here, I'm going to get AP32 showing up in cell K10. So that worked. If I do Control Z, I'm back to where it was. Okay, so this is kind of the listing and then the mapping. The list of reports shows up over here. So this is where I have my listing of all of my reports and the ACL script name in this case that I run and the various reports. And I try to organize them a little bit by type just to be, just to try to get some context to what I'm running here. But for the most part, what I'm doing is I'm numbering the report. I have the script name, the report name, and then the type. So let's kind of head back over to the process review questions. This is more from just I guess an Excel perspective. I just wanted to show this to you so that if you had your list of controls in column D, you can then map your analytic reports in columns K through N and use this Excel document to kind of be the go-between. You can definitely put in your own questions here. You can put in your own reports here and then use this as a mapping. So some of the things that you can do at this point. Let me kind of drill into this. So me just take a look at 32 and 33 just to make sure I understand what I'm about to explain to you. Yep, that's perfect. Okay, so this particular test right here, our system's integrated to allow automatic approval and routing of procurement authorization. And the the answer is yes or no. It kind of raises up this question of approval and where things might be under approval limits, over approval limits, et cetera. And there's a lot of testing that you can do there. This is one where we're saying for purchases outside of the normal approval process, and then we have other tests here. But how did I map this? And what I did was, these are just columns that have numbers in it, and these numbers, again, relate back to the report numbers back here. So report 48 is report 48 here, and notice in the right-hand column you'll see AP32 showing up, and that's AP32 right here. So again, that's kind of how the mapping works. I'm using VLOOKUP, and I'm using this very nasty kind of if statement with VLOOKUP in it. But in essence, what I'm saying is, if that field is blank, then make sure you put a blank space in there. Because what happens in VLOOKUP is, if I just kind of do a basic VLOOKUP here, and I need to put an equal sign and get rid of that stuff there, so that should work. This will work for this instance because I have a number that works, but if I put an X here, it comes up with NA. And it's really annoying to kind of look at all these NAs showing up on the screen, so I'd rather have a blank space in that case. So instead of having the code just read equal VLOOKUP, and we'll talk about the VLOOKUP in a second, that's going to look up this field over here. If there isn't a match, it's going to put is it an NA. So what I can do is I can change the code to it being equal if is NA, and then I can put that entire VLOOKUP statement in there. And what I'm basically saying is, if the item is NA, the VLOOKUP comes back with NA, you want to put a blank statement. If not, you want to put what the match was. So if there is a match, you want to show it. If there isn't a match, in this case is NA, then you want to put a blank space. So that's how this is NA works. I'm going to be giving you this Excel spreadsheet as one of the files that you can work with, so I don't want you to think or try to write this down so quickly or anything like that. It's not needed. But I did want to explain it to you because obviously your list of reports in this case, now we'll kind of dive into the VLOOKUP alone. So let's get rid of this if and is NA and all that stuff because it gets a little confusing to look at. Okay, whoops. And you have to put an equal sign in there. So what I have is AP32, the VLOOKUP. What's nice, if you ever want to kind of insert a function, I like to click on the Insert Function button, and what that'll do in this particular case is give you kind of like the VLOOKUP, but now it'll show it to you in a much more interesting way. So in this particular way, what I'm doing is I'm looking up value E11, and E11, as you see here, is right here, which is that 48. It then is going to look across a table array, which is in the reports folder, and it's A2 to D80. So that's my listing of reports. You might have more reports. You might have other things that you want to map. What I'm doing is I'm starting at A, so I'm saying I want to write column 2, which is in this case well, let me go back to this one here. Column 2 in this case was the list of reports, or the item, the actual report name. And last but not least, we type in the word false down here, which means I want it to be a perfect match. So it has to, you have to type in 48. You can't put in 48A, and it's just not going to work, unless there's a match back to here for 48A. Okay, so that match, or VLOOKUP, allows you to kind of create that mapping. Once you've created this mapping, just get that going back there. Once you've created that mapping, you're able to, really think. What I do is I print out my list of reports, and I just go down my list of controls or process steps, and put in all the analytics that could help that process step. So in this case, we have 32, 33, I guess that was it that I mapped to this one on the approval limits. And then we'll look at reports 32 and 33, AP 32 and 33, which are here, AP 32, 33. And notice it's, vendor invoices with numerous invoices directly below an approval limit, or invoices entered by the same person who created the vendor. Again, kind of playing into some of the approval areas and what's being entered into that system. Let's take a look at some more examples here. One is, is there a sole source relationship with vendors that might have a negative impact on the business? AP 46, let's take a look at that. Supplier invoices when that supplier is the only one posting to a general ledger account. And we're going to talk more about this a little bit later with distribution reviews and looking at data from a distribution point of view. But what's, this test is useful. I mean, if you can look at an accounts payable distribution to the general ledger, you can find out, what supplier is the only supplier posting to general ledger account number 123. By knowing that, you're able to see, obviously, is there a sole source relationship going on there? And again, that might be a conflict of interest. Other things that from a testing point of view, I've done things like matching to the EPLS or the OFAC list, which is kind of a list of people you may not want to be doing business with. So I do some matching there. That would be some of the tests around that. Taking a look for the completeness and accuracy of a vendor record. We have reports VMF 05, 06, 07, 08. And then when we look at those reports, VMF 05, 6, 7, and 8, all of them fall into this category of kind of blank information. So, where a vendor has not, does not have, say, a TIN number or an address or what have you. So hopefully, this is becoming a bit clearer, on how we do this and organize this. There's so many more here. I'm not completely sure what your key controls are within an accounts payable, group, but I would bet that segregation of duties would be one of the key controls. I would bet that a reconciliation to the general ledger would be a key control. And while it probably is in here somewhere, that is a great test that you could do too. I mean, there's no reason why you can't summarize that general ledger distribution to the general ledger from accounts payable on a monthly basis and take a look at what was posted actually in the GL and kind of go to the accounting folks and say, this is what I'm getting as what was posted, where it was posted by account, and take a look at what they have. And I've even seen from a testing point of view where we've taken, say, their general ledger account entry in Excel, just listing it out, and then by also doing that, mapping that in. So, other things, requesting new information to vendors. I'm just taking a look. Let me just continue down to invoice processing. Items possibly with a strange invoice number to itself, what are kind of your controls around how invoices are entered into the system. The duplicate control, obviously, all the duplicate payment reports you could run, but I don't think a duplicate control is so much a key control, so I don't know, how much time people spend on that control itself. I still think that kind of like the distribution to the general ledger is a great one to look at. I think taking a look at check stock, so let's take a look at 43 and 71 here just to see what I mapped into that. Gaps in check sequence, great one to take a look at, and I forgot the other one, 71. 71 would be a supplier name. This is actually a really interesting test that I realized I was working in a certain ERP system, and you can have a different name on the check than you have in the supplier file. So this is like a great, it's probably not a key control to check anything like this, but what a great way of kind of defrauding a system. You could post to one vendor, but then put your name on it from a check point of view so that you could just go cash that check anytime you wanted. You want to try to prevent those things from happening, and this is this report would actually test every occurrence of that and say, when is the supplier name different, how different, etc. So the one of the thoughts here in doing this is obviously just taking a look at reports, taking a look at your controls, and mapping it out. One of the questions posted, fair question, is why kind of do all this lookup stuff when you could just type in AP27 here? And a great point. The thing is, you could then go like to the next step of not having to type it all out, where you could even have additional columns added here where you have other information. So you could bring in, say, the column 3 into that scenario, or column 4, and it's a way of again, just kind of mapping from a database point of view things together. And I agree, I mean, you could definitely type in AP27 from this point of view and use that as the map. But I think it's a good idea to kind of map your data together, so at least you have, even if it's manual, to kind of have VMF01 and, make sure in some way you can map back to that here. I found it easier, quite frankly, to enter in the numbers here and have it just automatically bring that over versus having to type these in. But I think from a VLOOKUP point of view, I think it's so that if I just change this to say, instead of it being 2, I'm going to put in 3 here. And now you can actually get kind of like the actual report name added there. Or what other, another thing you could do is if you have the data file that you're getting, you could, kind of add the data file here, and then you could kind of have this mapping, if you will, of all the data files that you need in order to run that particular report. So anyway, that's some of the rationale in doing some of the mapping here. I'll just change this back here to 2. All right. But again, I do find that this is pretty much a brainstorming type of a process that one goes through and looking at the reports that you might have, as well as just thinking up other reports that you might be able to run within each one of these areas. Again, I think what's great is, even though some of these reports are a little off, in the mapping, like they're not a perfect match to exactly what we're trying to get at in the control, even if it gets close, I still think it's a useful data analytic to use for your testing purposes and understanding the data that's flowing through that procure-to-pay cycle. Other things to look at are payment terms, but probably from a key control perspective, that isn't as big of a deal. I also like to take a look. Just take a look here. Other things to look at here. Yeah, so anyway, just kind of concluding with this mapping, you will get this document so that you can look at the questions I'm asking and some of the reports that I've mapped into the controls, which is kind of, in my mind, it's like a step 1, or, good kind of step 1. Going back to the slide deck, just bear with me 1 second here. Another approach that you might want to also take is to think about fraud and what reports might lead to that particular fraud task, or might give information on that fraud task. So, one example is, update the supplier record for personal gain. What you could then look at are all the reports that you might run, so reports 1 through 9, in this case, that you might run to take a look at whether or not a vendor has been updated inappropriately. For example, is the same person entering the vendor also entering the invoice? Is there a vendor that has no address, no TIN number, no phone number, the only thing they have is a name? Things like that. These are all things that would probably go into this area of updating a supplier record for personal gain. So if you had a variety of reports that you're running, you can start to line them up by the fraud task that somebody would perform. And again, these are all the tasks. If you do that, and it's very similar to what we've done in the key control mapping as well, you can start to then look at by suppliers. Now I'm like flipping it on its head and saying, well, let me just go back here, of the 10 things that somebody could do to commit fraud in the organization, process unapproved checks or input invoice check or other items to avoid detection, like meaning some of the reports there, they may be entering in checks on weekends or after hours, and it's just things done to avoid detection. Those are all reports that would be run, but what you could then start to do is figure out for these tasks that are happening, let's summarize them by supplier and start to look at which supplier is displaying the most problem. Do I have suppliers that are really clean, from setting up the vendor record and setting up the the actual invoice processing and things like that, whereas do I have other vendors that have lots of red and seem to have a great deal of kind of issue in the particular tasks that are performed to detect fraud. So this is a way of kind of looking at things, but this will kind of we will get more to this when we talk about scoring transactions, and we're running various reports for certain attributes. But again, either if you're mapping it from a control point of view or mapping it from a fraud point of view, I do like to put it in a database as much as I can because I just think it helps to organize it. I know like my fraud mapping database that I'm using here, it's pretty complex, and what's nice about it is once I was done with it, you're able very quickly to say report like red flag report 1, which is say that this item report 1, how many times or how many tasks is that used on? And you start to figure out that certain reports can really help out in 20 different ways. So this is kind of the unwritten thing when you're doing this type of testing. You start to kind of gravitate to a few reports that start to answer lots of questions for you. Be it a segregation of duty point where you have people entering the same vendor, same invoice, same check. I've seen it where people enter the PO, the invoice, the check, and the vendor. So they've completed almost the entire cycle of procure to pay. And by doing that mapping, you're really identifying those reports that have the most potential for you, so that you can run one report and gain a great deal of knowledge about the organization. So anyway, these are some of the benefits of doing your own mapping. I think it really depends on company because every company focuses on different controls. They focus on different frauds. So I do think it's something that really needs to be tailored to that organization. All right, and with that said, I'm just going to launch this next poll, kind of jumping back a little bit in time here. What chart type best shows value and volume on the same graph? Is it the scatter graph, the bar chart, the line chart, or the pie chart? And I did answer that one question. One question had come in with regards to, why not just put the number in there and do the mapping, and we did answer that. But if you have other questions, please post them in. And since 100% of you voted, I'm going to share that. And you are correct. The scatter graph is the best one. The line chart, you can do a line chart that shows value and volume on two different axes, and that can be useful, but I still find it's a little hard to read at times. So I find the scatter graph is really some of the best tools there to use. And what I spend more of my time in than anything is cost recovery. I help companies save a lot of money, and actually more money than everything that's ever paid out in fees and technology and improvements and all that stuff. It really kind of boils back to the cost recovery that is saved is usually 5-10 times more than any of the improvements we're putting in regarding the technology. So in looking at, continuous monitoring then of taking these tests that we have, that we've mapped out, the fraud tests, the control tests, and aligning to them and running them on a continuous basis, what it allows you to do is reduce a lot more time needed for compliance, because you can start testing 100% of it. I think management does feel more in control because they can point to reports and analytics and things that they're running to kind of be a bit of a safety net in saying, we looked at all segregation of duties, we looked at all transactions that might have been a segregation of duty, we looked at all conflicts of interest, we looked at everything, because I still feel errors live in that 1%. It's not, you don't usually have errors in a process that are 50% of a process, and they're just sitting there for the finding. It's usually in the 1% that you're detecting this stuff. And what I find with continuous monitoring is once you have it set up, the focus can really be on improvement and cash recovery versus spending all this time doing kind of manual testing. Further, it gives you a bit of a deterrent power because people know that you're running this stuff, and it allows you to better understand and better kind of put a message out there to the organization that we're looking. Last but not least, it allows you to get a lot more knowledge on your process and where your flaws are, where you potentially are going to have trouble, and then obviously just what improvements were made, etc. All of that can go into a knowledge management of that particular function. In kind of making it continuous, like, what do you do? For the most part, what I like to note up front is that it doesn't really make sense for every audit area. I mean, there are audit areas that actually, probably have no data to take a look at and hence would not be good for continuous monitoring. I also like to try to look for business units that want to do this type of review first. They have a little extra time in their department budget to do some self-review. They're willing to do it. They're not upset. They're not embarrassed. I usually find, people that have just taken over a new accounts payable process or taken over a new lease audit process, that they're in that position where they want to kind of find out where the problems are and want to start looking and start rolling things out. So, I say start small, roll out a few. Over time, you can always expand on it. And then if management is running this stuff on a continuous basis themselves, they're actually running these reports, audit can just kind of come in and periodically kick the tires and just make sure that things are working and acting as they should. Whoops. So from a data mart point of view, what are you setting up in internal audit? You're usually setting up a data mart that has accounts payable data, general ledger data, payroll data, inventory data, sale data, but I find it does start usually with AP and general ledger, and why most of this course is devoted to that. The nice benefit of having that data mart is that centralized data management. Audit knowledge is saved in one place. There's a lot more security and user management that can happen with that data mart. You can be secure. It's better data than the business units usually have themselves. So, if you're getting the entire AP file and analyzing it, you're usually going back to the business unit and telling them things about their process that they didn't even know about because you have much better data. Okay, so in getting this started, I find most companies will not go out and buy a continuous monitoring product and then look for a problem. It's usually a problem has hit them in some way. They've been hit, from a fraud perspective, from a control perspective, and they kind of get pain from getting hit and decide, what, we need to improve on this. We need to come up with a better way of not getting hit in the future. And that's when usually once they've gotten hit, the consulting budgets and technology budgets and all of that are easily made. In one company, I saved over $100 million for them, or identified a potential savings of $100 million. They got new technology, new people, new process, consulting firms, everything, and net, of all that they paid, they still saved millions and tens of millions of dollars over that amount. So it was well worth whatever they put into it to realize the benefits that were there. So the way I kind of look at it is, they need to be hit first. So usually what I like to do is even try to start off with cost recovery, and I want to talk about, some of the cost recovery tests that we can run. I find that within 90 days, usually you can have a recovery firm come in, find a lot of savings for you, and then you could use those savings kind of going forward. You might want to do it yourself. You might want to do a duplicate payment audit, which let me just kind of go to this example here, this duplicate payment example, where just running like 10 or 12 reports in the area, different versions of a duplicate payment report, such as taking a look at items like the same invoice, same vendor, same amount, slightly different invoice number, slightly different date, but everything else the same. You can really start to prioritize those duplicate items. You can remove items that have been voided. You can remove items that have debit memos against them. You can do something called scoring that we're going to talk about in a little bit, where you can take a look at duplicates that are showing up on lots of reports. So they have like a multiple potential of being duplicate, and hence should be looked at. In the accounts payable area, these are some of the components that I like to run. Just in a general sense, I like to look for vendor duplication testing if we have duplicate vendors, inactive, incomplete vendors, mapping that vendor activity to TIN, basically to the IRS TIN matching databases, doing terms analysis, doing a bit of a fraud analysis, and et cetera. So these are all the things that you could incorporate, and this should have a very nice recovery return to you. Obviously duplicates and credits and such that vendors could give back to you are just a normal thing. But I think looking at terms, like I've one company that a lot of what they're paying is paid out within 20 days. So 20 days is like their limit almost of how long they wait before paying someone. And if they just extended that out by 10 days or 15 days to 30, 35 days, they would be picking up millions of dollars in savings every year just in interest cost of being able to hold on to that money just for another 15 days. So there's a lot there, from an annual return once they change their vendor terms of working things. So there's lots of different ways to save money. In a book that I wrote for John Wiley, we identified about 17 different areas of fraud detection and of cost recovery detection. And it starts out with the basic accounts payable audit, looking for duplicate payments and overpayments. It then extends into more contract type auditing, where you're doing maybe an audit of your advertising agency or your copy machines or your freight or your health benefits. Health benefits is a very fruitful area. Even 1% wrong in your health benefit spend can be millions of dollars. So, I've identified areas where it's 2 to 3% off of the total spend. So there's a lot of savings that you can get, or a lot of leakage that's going out in the health benefit area. Lease auditing, advertising or media auditing, taking a look at what advertisements ran, etc., is media auditing. Order to cash, taking a look, did I charge my customers for everything I should have charged them for? Looking proactively for fraud, doing real estate depreciation testing. It's otherwise known as cost segregation, and that would be for anything that you own buildings, so you don't lease it, but you own it. There are ways of even tax cost recovery of that building. There's sales and use tax, there's VAT tax, there's R&D tax savings, various other tax savings programs for hiring employees in certain neighborhoods to kind of help the economic welfare of that neighborhood. All of those things fall within these tax benefits. A lot of companies just don't know about them, so it's something where once they know about it, they can start claiming on that. Strategic sourcing is where you're taking a look at your vendor population and deciding, should we outsource the purchasing of some of the stuff. So we're not the ones managing it all. We actually have a firm that takes a look at that spend and will determine for us who are better vendors for us to work with, who have better quality, less price, that kind of thing. So that the strategic sourcing area can really extend across telecom and freight and leases and all these things, because you can actually use them to help you see if you're paying too much for any of this stuff. Telecom audits do that. Telecom audits also audit things like the inventory of phone lines that you might have at a company. There's travel and entertainment auditing, there's utility auditing, and making sure that you're not overpaying for your utilities and getting all the rebates that you're due and all those things. So, I'm just going through these 17 areas that are in this cost recovery book that I wrote. But, even if you pick 2 or 3 of these areas and got started on them, they could save your company millions of dollars in the next year. And it could somehow relate back to your control testing. I mean, the accounts payable work that you do, the health benefit work that's done, which is a big component of probably what you're paying out in accounts payable payments. These are things that really do kind of help the organization. The strategic sourcing, from a vendor point of view, they may tell you you're working with a vendor where you're paying 100% more and their quality is less. So, you have this kind of crazy relationship with some vendors, and that might show a conflict of interest. I mean, it might show that we've picked a vendor for years because the person in charge of that vendor gets tickets to baseball games or whatever, and they just don't want to give up their tickets to the baseball games. It can be as simple as that, so all of these areas, as much as they're cost recovery, they do have an ability to kind of reach back into being a control test as well. In looking at cost recovery, I do find that internal audit is a great place to house that activity and that audit. It really, trumps things like, we found millions of dollars, what do we do now? A lot of companies will kind of sit on the millions of dollars because they're afraid to admit that they lost it. So, this is an area where internal audit can step in and say, what, we really do need to collect on that money. I think that, the independence of internal audit to get over company egos to, items that happen. Again, there might be a lot of duplicate payments. The accounts payable team might not want to admit that upstream, so internal audit is a great place to just be more honest about it, quite frankly, and work towards a positive solution versus having people kind of afraid that they're talking about their duplicate payments or whatever errors they may have. I find that cost recovery firms can help out a lot of internal audit departments. I've seen some internal audit departments that use cost recovery firms as almost like an extra resource, a free resource, in that they will work for a contingency fee, but they're not going to charge you anything until they've saved you money. So it is like a free way of getting auditors to audit healthcare, leases, advertising spend, all these areas that an auditor might normally not get involved with, but now that they have an ability to have this external firm do the work for them, it's well worth their investment. Internal audit's another great place because they usually have great access to data, so they can get a lot of data that other departments like process departments can't even get themselves. Last but not least, I think internal audit being that knowledge management of it all, so that they can manage the knowledge from year to year and help the organization improve on their past by essentially by basically making sure that those improvements get incorporated into that business process. In looking at recovery auditors that I work with a lot, as well as internal auditors, what I find is that internal auditors don't have enough time. Recovery auditors will take 3-4 months of time, literally, whatever that be, it'd be about, 400 or 500 hours, and they will spend 400 or 500 hours working on a project to find money. And it's rare to see an internal audit department spend that much time in a health benefit audit, as an example, or in an accounts payable audit even. So, recovery auditors could be utilized again in this capacity to go beyond where internal audit can go, really look at like everything, and then say, we looked at everything and this is only what we found. So it is more of a much better analysis than an internal auditor that might only have time for a 30 or 50 unit sample of selection. So I find working with recovery auditors does help the internal audit department. And when we think about the areas of recovery, so I'm going back to this list of recovery of the 17 areas. When we look at that list of 17 areas, again, I have my other cube for that. And what you're usually looking for is prospective, which is going forward, and retrospective, which is looking backward, for money. So prospective would be things like I've set up a new telecom contract so that I can get a much better rate on my telecom purchase. That would save prospectively. Retrospectively, obviously, is looking backwards and seeing all the things that I missed. In a lot of this analysis, you're doing basic fact checking. So it's just, what does the contract say? What are we paying? It's amazing how many companies will sign a contract, put it into the, the legal contract folder, and will never refer to it again. They just get bills from whoever that vendor is, and they pay those bills. So, lease payments, the actual lease buildings that you have and equipment, it's very surprising to see that most accounts payable departments don't go back to a contract to make sure that they're paying the right amount. They just pay it. That's their job, is to pay it. In looking at it, errors can happen internally, errors can happen externally by the vendor. You can also get recovery by just benchmarking and saying, in this industry of, let's say, gas purchases for our plant, the gas purchase is being purchased at a higher dollar rate than we should. And, based on benchmarks of the industry and who else is in that area and other competitors, you're paying far too much. That is a great use of the benchmarking and just knowing what's out there. And similarly is tax advantages of things that you just don't know about that are in the tax code, or your company doesn't know about in the tax code, that you can make or put to your advantage. We kind of talked about this one. I wanted to note that most companies used to take the old way of approaching it, of buying software, training staff, going through trial and error, and then running reports. But I think the better way, the new way, is just find the money first. It gets rid of a lot of the trial and error, especially if you're using a cost recovery firm. And then all you have to do is then buy the software, train staff, and but you now have a business case for what you're doing. So it kind of summarizes a lot of what we've been talking about so far. These were the areas we talked about. In the categorically speaking, we talked through this, but a lot of it does come down to kind of basic fact checking and identifying, is the issue happening internally, externally? Is it something that we just don't know about ourselves because it's industry benchmarking? That's where the money comes from. And this was kind of a list of questions that I got that in working with my advertising agency audit firm that they utilize, and it's a good list of questions. I mean, I thought they were good control questions that you could ask almost against any vendor. It doesn't have to be advertising; it could be anybody. Did we overpay the vendor due to an error on our part in paying that invoice? Is it because of the vendor's, error on their part? Are there charges posted that don't reconcile to the contract? Are there cleansing adjustments that are happening on the vendor side? What type of terms or float cost are we absorbing because we're paying this vendor too quickly? Are there monies owed to you that's just being sitting on the books? Or is there a conflict of interest with that vendor to someone else, where they are working in a conflicted way, and they're kind of the pass-through organization of that conflict? These are all, valid questions in the accounts payable area, could definitely be added in to any sort of audit program you have. But I wanted to kind of show these as this is what cost recovery firms think about, when they're working through their audit steps themselves and looking along each one of these questions for answers and making sure that the organization is as tight as it can be on these areas. So with this said, I have this recovery questionnaire. You'll also be getting a copy of this. And I just need to bear with me one second here. So I have an index to it where we have all these areas: health benefits, leases, telecoms, etc. And I base this on this cost recovery book that I've written. But it gives you a bunch of questions that you could ask, that really will help you to better understand whether or not there are issues within your department, be it accounts payable, be it a shipment of funds to the state, be it strategic sourcing or health benefits. Each one of these has a list of questions that you can refer to and make use of. So again, we will be getting this to you at the end of the class, but I wanted to kind of take a lot of those audit areas that we had on that slide and kind of come up with the list of questions. And they're really, at the end of the day, they're scoping questions to determine how good of an opportunity is each one of these particular audit areas or cost recovery areas. Okay. Now, some of the things that you could do to determine even further if you have some areas for cost recovery, have some areas where you could do some of this vendor auditing, is to take a look at your distribution of the accounts payable. Where are the expenses posting, and where in the distribution is it posting? And going to this next slide, this gives you kind of a list of these opportunity areas that you could take a look into and reports that you can run. If you can get a distribution ledger, and I'm going to try to show you an example of that, you can take a look for things like accounts that have been sole sourced, accounts that have too many vendors, obviously areas that map to that list of recovery areas that we had a second ago. We have that list here. So, these are all things that, you can do with the analysis. Just taking a look at your top 20 or even 100 vendors, it's amazing how many people don't look at who are their top 100 vendors, and hence, based on that, decide, what type of auditing or how should we approach this particular spend area based on, just even looking at who are the top vendors. In a lot of ways, you can almost, in some ways, by looking at the top 50 vendors, in some way, you could get a better understanding of the entire accounts payable spend, because probably the top 100 make up like 90% of the spend. Top 50 vendors probably make up 80% of the spend when you look at that vendor. So, with these tests in mind, you can do a distribution analysis, which I'm going to show you now. We'll go into Excel to kind of show that to you. So let me just bring that up. And this will just open up in a second or two. There we go. So what we have here is basically just taking a look at your vendor number, your account number, and then the account description, and then the distribution amount. I'm not going to worry so much about what's over here. What you can do is pivot table this data. So, a very simple way is to insert that pivot table. And I'm just going to, bear with me one second here. I'm just going to get rid of this who entered it because I don't care. And what it does is it very quickly kind of boils you down to the account description areas that you have. So, you can very quickly look at your data, and I probably should, look at everything. Let me just do that. So in pivoting that data, and let me just show the field list here. So I have the account description and the distribution amount from over here. So we have account description, distribution amount. And we've just summarized it from, and from a sorting point of view, I can actually get that report filter out of there. And from a sort point of view, you can click on this and sort from high to low. You can then just quickly here kind of add some value. And you can start to see, where are our larger expenses. It's like mostly in the recruiting and temporary help and outside consulting areas. There is some auto leases that we have, etc. But it does give you an idea of where your spend is going. So that's kind of step one. Then what you could do is you can add the vendor to that category. And now I have each vendor number for each account description. The account descriptions weren't too much. I mean, I might just actually bring that over as a column, for a second here. That might be easier to look at. And quite frankly, I may even change this. I'm just kind of free form doing this here, but I could change that to count. And then what you could do is, now that I have the vendor number on the row, the account as the columns, I'm just going to kind of get rid of that field list and make this a little smaller. I can go down to the bottom and just take a look at, how many vendors do we have for each one of these categories, and why do we have 1,300 vendors here, and, et cetera. And what you're looking for, and I don't know if I have any, here we go, we got one finally, is you look for that one where what vendor do we have that there's just one posting or one vendor for that area, and I'm just, sorry, there he is. So then you could double click on that one area, and then you can get the actual, details for that. But this is a way of very quickly identifying your sole source vendors, where you have, say, one vendor for an entire area of spend. So wanted to kind of show you how the distribution analysis can be used. I think it not only can be used from like an overall assessment of your spend and determining where you essentially want to where you should put your focus, so looking at it from that perspective, but then also taking a look at which vendors are also taking place within each one of those accounts. All right, so with that said, I'm just going to go into the next polling question, which is, what is not one of the cost recovery areas we discussed? Freight, payroll, utility, or accounts payable? What is not one of the cost recovery areas we discussed? And just looking over the questions, I don't see any questions coming in. We're kind of on course from a time point of view, and we'll be getting done about the 40 or 50 minute of the next hour, so one something or so, 140, 150. And the couple of things left that I wanted to talk about is transactional scoring, which we'll talk about, and taking a look at your general ledger data to get a better understanding of your data. And then taking a look at some of the added bonuses that you'll be getting. But for now, we do have the polling question. I'll just hold for any questions here. Okay, we'll just pick it up in just another 30 seconds or so. Okay, so let's close that poll and share it with everybody. And as you see, payroll was the right answer. You know, I find the payroll area isn't the best area for finding cost recovery. Usually it's managed pretty well from an accounts payable, but from a human resource point of view, to get onto payroll can be very difficult, you know, at companies. Getting a vendor on your books a lot of times is really easy, but again, paying a payroll payment can be extremely hard to get through all the controls associated with it. So, okay, so with that said, just kind of getting back into here. I'm just trying to hide my screen. All right, we should be back. Good. Okay. So back on the transactional scoring, and what I wanted to talk about now is how can we use some of the reporting techniques that we have to get a better sample, because, you know, as I said, internal audit tends to not have a lot of time on their hands to do actual audit work. You know, they're usually running from project to project. Sorry about that. Usually running from project to project, trying to understand, you know, get as much done as they can for the organization. And in doing so, they're not going to focus as much in a particular area. What you can do with transactional scoring is to identify a few reports that can be combined so that when you pick a sample unit item, it might answer 10 or more tests. So again, a vendor segregation of duty issue might align to 20 of the questions that we had in that audit program. So that's a great report to run because it aligns against all that. But you could even go further and say, if there's segregation of duties and weekend journal entries and amounts that are all rounded and things look weird from an average point of view, and you can add all of that up and say, what transaction meets all of those tests? That's a much more powerful statement than just looking at the segregation of duty test. You know, you've kind of given more context to those items, but also you can test more things with it. You know, so that's the nice thing about it. Okay, so transactional scoring, making you much more efficient. You know, it started out for me at least here, where I put together 7 reports that were kind of showing up on various reports. Items that are paid on different checks, a lot of debit amounts, a lot of multiple values, above average values. And the focus of this was a little bit more on cost recovery than it was on you know, fraud or controls, quite frankly. But you know, it still was still very, very useful in that regard, in that it helped me to identify those vendors that we had a lot of payment errors with and potential issues with, because we had so many adjustments and large dollar values and all that. And I think, you know, that the sampling problem for us auditors is that, you know, we don't have the time to do a 1,000-unit sample, and at the same time we want to get coverage of our risk and our controls. But what I've kind of found, these are just a lot of funny numbers here, but it's usually, if you run a lot of these reports that I run, you know, 1 in 5 of the transactions gets a red flag, but only like you know, so that's like 20% get the red flag, but only like really maybe 0.02% or 0.03% are a problem. So you have a lot of false positives. And the way I look at it is, it's almost like a 1 in 1,000 shot, or a 1 in 800 shot in this case. So imagine throwing a random dart at 800 balloons and hoping to hit the right one. That's kind of like sampling. I mean, when you think about it, even though there are a lot of statistics that can help you there, I do find, you know, doing 100% testing is just far better. It's just, it can be costly and time consuming because you're looking at everything. Now, ultimately what you want to do is kind of get back to this transactional score where you're organizing into one place or one score, you know, all of the reports that were run. So for a given transaction, how many reports did that transaction show up on? And if it shows up on 5 or 10, you know, that has more of a severity to it than one that shows up on only one report. So these are things. You can change the value of those scores too, so that 1 or 2 reports might be better than 5 other reports because those 2 reports are just really bad when you show up on those. So these are all the severity and differences that you can give to things. But with that said, I want to show you a lot more examples in Excel here. But some of the other benefits is really you're able to kill more birds with one stone. A 50-unit sample could test 38 duplicate payments, 22 round invoices, 18 in-sequence invoices, but you're only picking 50. You're not picking, in that case, 78 items. You're picking 50. So there's a lot of efficiencies that come out of finding those items that are more severe and focusing in on them. So in kind of looking further down this road, we obviously want to pick things that are rare in several ways, not just a weekend or unusual invoice. Not just a weekend invoice. We want to make sure it's a really unusual weekend invoice. So we might want to take a look at the size trends of things as well in each of the tests. So you might have a lot of low dollar stuff that you don't care about. And that is one way of kind of filtering out a lot of the reporting that I'm running, so that those false positives kind of kick out, because we're not focusing on every $50, $100 item. That is one approach. I also find, especially this is an analysis of items that are paid on weekends, and it does show a lot of values that are, from a volume point of view, that are small. And maybe if we looked at everything over 5,000, we would be looking at a lot less of the population. I mean, probably 20% less of the population. And we'll talk about that in a second, above average standard deviation. But let me kind of jump into Excel now and kind of talk to you about scoring and more or less how we can effectuate this in Excel. And bear with me one second here. Okay. So, here's an example of a scoring where what we've done is we've more or less just summarized this by vendor. So this is a scoring by vendor and just saying, does the vendor show up on report 1, report 2, report 3, etc. And in this particular case, this is going back to that slide I had a minute ago that had, the duplicate payments, the above average, the round dollar items, all that stuff. All of that, was part of this particular scoring. And this is very simple. I'm not getting into transactions at this point. I'm really just saying, did the vendor show up on the report even once? That would be enough for me to kind of give them the score. And that's a great way of scoring vendors for further review. So this is kind of this approach. Now, in this case, I'm kind of showing you the final product, right? I have the report 1 score, 2, 3, etc. All of that is adding up to this total score over here. So this is a sum, in this case, of these items over here. And what's nice about doing this type of work, especially, I'm trying to think how many vendors, I'm looking at like 6,000 vendors and scoring the 6,000, is a scatter graph, again, is a great way of kind of quickly looking and plotting your data and saying, okay, which vendors, there's a lot, we have 6,000 items, by the way, on the scatter graph. And I'll just try to blow it up a little bit so you could see this, but most of these items are very small and have low scores. So what you might want to do is focus in on ones that have obviously higher scores. What we can also do is change this axis to be maybe a little bit better for us. It's probably going to bark at me and say that there's 0 values in the data. No, there's not. Okay, there's not negative values, so that's good. This might be a better way of looking at things. This is a logarithmic view, and again, how I got here was I right-click Format Axis, click on Logarithmic Scale, base 10 in this case. You know, how many items are under 1,000 in this case? So these are vendors under 1,000, and then you could look at, you know, how many of those items drop off. I mean, you're dropping off probably about a good 30% of the file. You know, as you get into the 10,000 range, and especially if you say, you know, I don't care about scores under 30%, you know, you're now looking at a range here. If I can hopefully get a shape in here that makes sense, but you're looking at a range of about this. And so, you know, we're now kind of looking in that quadrant of the scoring because we've added up all the scores by vendors. We have their values down here. We have it logarithmically. And just by looking at this, you can identify out of 6,000 vendors, you know, actually if I raise this up a little bit to even the 50% mark instead of the 40% mark, you're now looking at vendors, you know, probably only about 20 or 30 vendors, maybe 50, but I don't even think there's 50 in there, that relatively speaking are covering a lot of the high score and high dollar amounts throughout this whole population. So it's a way of mathematically scoring and then therefore picking samples and having a good logic behind it. You know, so it's something where you've run a lot of reports that helped you risk assess who to look at, and then based on that, you're picking kind of the top items. You might want to look at that score by date, you know, so now I'm just kind of having fun with the graphing a little bit here, but you can kind of look at, you know, how that score might be trended over time, and especially in areas where you have like a high score happening on a given day, you might want to take a look at that given day and try to understand, you know, why is this happening, and you know, what can we do to you know, to determine what's within that day. So, you know, October 3rd, if we, gosh, you know, went back to here, okay, this was a summary of what we had before, but at least you'd be able to understand and look into more into that day and research that particular day. So I still like to summarize things from like a when perspective. I like to summarize things as we do here by like a who perspective, like who are these people? These are the top vendors to take a look at because they have the highest score and higher dollar values on average. So it definitely helps out. Oops, let me just get rid of this. Okay. So what I wanted to then get to is how did I make this scoring document? And, you know, we'll kind of show this to you quickly here in ACL because I normally do this more in ACL than I do in, say, Excel. But with that said, what I'm doing here is I'm taking each of the reports that I ran that are problem reports, and I'm joining it to a supplier file that has every supplier. And in this particular case, I'm just kind of you know, listing them all out. I'm making sure that I'm setting it up with a primary join so that I keep all the items in my supplier table, and I just join in the scores that have happened from these particular reports that have kind of cropped up here. Now, to do that in Excel, we're going to take a look at this. I'm going to use the VLOOKUP again, and the VLOOKUP is used to look back to see whether or not a particular vendor is listed on that report, and if so, if that vendor is on that report, then to put a score here. So let's kind of take a look at that here. So let's go back to our Excel file, and notice here I have the supplier number and the report score 1, which is 10% if you showed up on that report. So you see vendors here, some of them have it, some don't. Report 2, some have it, some don't. Report 3, 4, etc. And what we have here is, again, the supplier number and then the score. What I then did was I VLOOKUP'd, so we'll go into this VLOOKUP. And what I'm saying is look up this value, 1, the supplier number, go to the table array A2 to B100 in sheet 1. So sheet 1 is report 1, and look at A2 to B100, and then do a mapping, and if so, bring over that score which was in the second column. So this is similar to what we did before in the VLOOKUP, but in this case I'm just looking at supplier number and bringing in the score. Is it 0 or is it something else? You know, and that's what happens here. That is done for each report. So notice this one is looking to sheet 2. This one is looking to sheet 3. This one's looking to sheet 4, etc. So each one of these look to the various tabs, and once you've identified them all, you can then combine that score into this final combined score, which in this case is the 45%. Okay, so hopefully that makes sense, and utilizing multiple reports to kind of get to a better answer on the data is quite useful. And what I like to try to get back to is this like master transactional score, where you could come up with a model here. Like I had those 7 reports. Those 7 reports might be for fraud. Then you might have another 7 or 10 reports that relate to certain control activities that you care about. Then you might have other reports that relate to cost recovery. You could create a score for each one of these. So it's the same reports, but you're organizing it based on what you're looking for. So a particular report may be more like an above average report will be more useful to the cost recovery exercise because you're looking for above average things than it will to like a control test, because the fact that it's above average doesn't really mean very much. But from a cost recovery perspective, it could be very useful to maybe find where you overpaid something. So just kind of think about not only having scores, but even having like combo scores that allow you to kind of gain many perspectives on that particular transaction or vendor. What I really like about transactional scoring is it allows you to sample based on risk that you determine. Like you mathematically start to determine what is risk, and based on that risk, that's how you're going to pick your sample. So again, I think it's a much more refined way of doing it. Just looking at a couple more slides here. Whoops. Some of the other things that I like to do is to summarize the data in various ways, which is what we had here, which is when we did it by the when, by the who, which is the vendor, by even where, by even looking at where in the globe, is this happening, can also be, a very useful exercise as well. Some other ways of summarizing it, I'm just giving you just too many ways, but here's another way. You could summarize it by who's entering things or who's buying things, and it might even be a way of trying to find collusion, where you could say a certain vendor is highly scored for this enterer and that approver and that department and, et cetera. And when I put it all together, the same vendor is being touched by all these people, and they're above average, every one of them. So it's very strange that all my above average people are touching this one vendor from say, a fraud reporting perspective. That might identify collusion and something to talk about. We've talked through the scatter graph, so I've shown you that slide, and also taking a look at things from a timing point of view. So that's kind of the who and the when. From a where point of view, this is actually an example of batch geo, which we were talking about before. It's kind of the competitor to MapPoint. And what geo mapping through batch geo does is it's kind of neat in that it'll make the object bigger. So actually, if you look at that bottom screen there's like a large item it's kind of like a tag mark, but it's really big for one, and the rest of them are kind of big, and then some are small. The really big one is just a really big score. So you could take a look at that vendor and understand, like, why do we have such a big score for this particular vendor? Okay, so with that said, we go on to our next polling question, which is what Excel function is mainly used to organize the score into a master score. Is it SUMIF, COUNTIF, RAND, or VLOOKUP? So which Excel function is mainly used in the scoring? SUMIF, COUNTIF, RAND, or VLOOKUP? And I'm just checking the questions. I don't see many questions coming in, but we do appreciate them as they come. Oh wait, I do see one question coming in with this is for ACL users. I use the relate function more often, but I do see trainers using the join function. Do you have any thoughts or recommendations? Yeah, I use the join function more so because what I have found is that the relation function sometimes will bomb out for me if I have a lot of records. And what I also find from an efficiency point of view is that the actual joining of a file, now it's physically on my hard drive. This is ACL speak for those people that have ACL. But when I physically have a joined file on my hard drive, to process that file would go a lot quicker than to process a file that is related, because the relationship has to kind of go through all the indexes to figure things out to give you a final result. So yeah, I tend to join things because of that. If the files are relatively small, though, I don't think there's anything wrong with relation, because you won't really notice the difference. But if you are working with very large files or such, I find joins better. So I tend to kind of assume I'm going to have big files, and then when I don't, it's kind of a good thing. But that is why I use the join function. Okay, so 100% of you voted. Let me show you that. And note that, yes, VLOOKUP is correct. That's what we were using to join the various scores together, and that is the correct answer. So just going to our slide here, I wanted to talk about the automated journal entry, general ledger mapping tool and approach that you can use. This uses Excel. It also uses a product, Active Data for Excel. So we'll talk about that product quickly, but also, wanted to note those two things. It is a little bit complicated. I normally do this in ACL because it's more of a script, and as you'll see, but I did want to note that you can do it in Excel, and it has great benefits. So let me kind of jump into Excel for a second and explain to you what I'm getting at with our journal entry testing. So, most general ledgers with journal entries happen in this fashion. You have a journal entry number followed by the accounts, and then followed by the debit and credit amounts. Journal entry 2 in this case, and again, debit and credit amounts are posted. Now, it's normally in more of this vertical fashion, where items are just kind of posted in a vertical way. What I'm going to ultimately try to get to, and it's a little bit, it's a little hard getting there, right? But what we're going to get to is where the journal entries listed here, and for each one of those journal entries, we have the accounts listed here. So these are the credit accounts, and then these are the debit accounts for each one of those journal entries. So I'm trying to see here if I can find it, but let me, I think I filtered, that's why. So let me select all of them here. Okay, so journal entry 1 in this case had a credit to 2010 and a debit to 72470. So if I go back to my original data, we should have the 20,010 and the 72,470. So you can kind of see how this vertical general ledger has now become a horizontal, oops, sorry. It's become more of this horizontal data, where you're basically now having your journal entries here. Now, why do you want to do that is a good question. And what I'm really looking for, as you'll see, and as we summarize on the patterns that come out of this, is I'm trying to see how many times do I have a journal entry where the credit is 10192 and the debit is 15,000. There's 450 of those journal entries. So if I click on that, excuse me, I can bring up the details of those 450 items. And again, these are the entries where we have the 10192 as a credit and the 15,000 as a debit. But isn't it interesting, you know, kind of going back to this original sheet to say, okay, of all the journal entries that I have, and let me just take a look, you know, let me just maybe highlight this. Out of the 8,680 journal entries that I have, if I look at the top, let me say 20, I'm looking at 3,226 of those journal entries. So I can look at 20 journal entries and I can understand 3,226 journal entries by looking at those 20. That allows me, again, going back to getting a perspective of data to help your risk assessment, to help what reports you pick in the first place. This is hugely useful in taking a look at your general ledger, looking at everything that's happening at that company and trying to make sense of it. So that's kind of why I'm doing this. I'm going to give you the spreadsheet so that you can walk through it yourself, but you know, kind of giving you the why first before I dive through all of these particular things that we're going to do. So what I did initially, in order to kind of get to that point and being able to quickly understand journal entries within my organization, I have the listing here, what we're all used to, and I used active data, although you could utilize anything in this case. I mean, you could use pivot tabling, for example, but I summarized first on the journal entry number and the account number and got my totals. And it sounds kind of crazy, but you know, I did this because a lot of times within one journal entry, you'll have multiple postings to an account. So for this journal entry 10, assuming I'm right here, you'll notice that you have 3 postings to account 61950. And it kind of makes it annoying when you're looking at your data to look at repetitive things. So I like to summarize it first. So we summarize it by journal entry number and account number first, and we get to this final detail. And what's nice about active data, we'll show you this in a second, active data even gives you like a little comment that tells you, what you did. So I started out with, I think it's about 110,000 items, and we summarized it by the journal entries to get us down, and account to get us down to, I guess it won't get me down to the bottom, sorry, get me down to about 50,000. So just by summarizing, I've brought it down from like 110 down to 50. So active data, if you haven't heard of it, it is an add-in to Excel. You can do things like summarize duplicates, gaps, etc. I'm only going to be using a couple of tools today, so we're going to take this journal detail, we're going to summarize it, and we could summarize it by the journal entry number and the account number. I accumulate the credits and debits, I hit finished, and when I do so, I get this report here. So that's kind of like the summarize command in active data and how you can use it to get your result. The next step was I had to filter out the credits from the debits. So I just did a quick filter of the credit amount total, so I got rid of like the zeros in this case, and I highlighted and copied all of my credits. And I copied that to an item called sum credits. And then I did the same thing for my debits, and I called it sum debits. So the debits have just the debit accounts or debit amounts and accounts, and the credits have the other. Okay, once I did that, I created a little, how do you want to call it, a little process here where I set up, and actually I set up a process here where Yeah, and there are a bunch of if statements here that I'm probably not going to go through today, just in the interest of time. But what I really was working, and by the way, I'm sending you the spreadsheet so you can work with it yourself. But my goal here was to say, if the account number is the same and the journal entry number is the same, then you want to add a line number to it. So I kind of created my own line number here. In this particular case, there are 3 lines for this journal entry. And notice I created the 3 line numbers using this if statement. And it's kind of looking at the journal entry field and that field and kind of coming up with this approach. In doing so, I then created a calculated field called line and type, which is C for credit plus the line. So that's all it is C, C1, C2, C3. And in some of these cases, you'll find that some journal entries go out for at least 10. They might even go out for many, many more. But there are cases where these are journal entries where there is a 10th line to it. There are 10 credits posted in that journal entry. You could expand this to be more than 10. I mean, you could make it 50 if you really wanted to, I suppose. But I find 10 is a pretty decent starting point because most journal entries only have maybe 1 or 2 postings to it. But these are all the things that you're going to learn when you run this analysis. Okay, so I have my sum credit and sum debits, and I've followed the same approach of having the line number associated with each one of the journal entries, but after I've summarized it by journal entry and account. So that was kind of step 1 and 2. Now I'm going to utilize an active data function that's pretty cool, and it's called the top bottom items. And what I can do is, actually I've already run it on that one, so I'll go to the sum credits, hold on, and I'll go to top bottom items. I'm going to, it's actually probably lined up for me already. I'm going to go bottom items, so I'm going to go like C1 to C10 in this case, as you'll see in a second. And I'm going to say group by journal entry number, give me the lines starting from the lowest, which would be 1, to the highest, which is 10, and give me the top 10 items. You could go with 50 here, 20 here, if you planned on it, but right now I've just kind of cut it off at 10. So we're just going to get per journal entry the top, or excuse me, the bottom 10 items. So when I click finish there, I end up with this bottom 10 items. And what that'll do is, as you'll see, is there won't be any instance where the line is going over 10. It'll be, in this case, line 1, line 2, then it goes to the next journal entry, then it goes to the next one, and etc. Some journal entries, as I can see here, well, this is maybe, yeah, this is just the credit side of the equation. This journal entry really just has 1 credit to it, so that's the 1 item here. Okay, I did the same thing for the debits, so I now have the bottom 10 debits and the bottom 10 credits. And by bottom, I only mean based on the line number. So, where is that account showing up and listed? And what I then did was I put them on top of one another. So I literally just kind of copied and pasted the bottom 10 and the bottom 10 debits and credits into one spreadsheet, and that's what you're looking at here. So, again, just copying and pasting kind of this data, and then copying and pasting from this item here, and that got me to the bottom 10 credit and debit. Once I was at this point, so I now have, again, the top 10 credits and debits. So again, journal entry 1, which we looked at before, only has 2 lines to it, so it's 1 debit and 1 credit. Journal entry 10 seems to have 3 debits to it and 1 credit, et cetera, et cetera. And the account numbers here. When I pivot this, the way I pivot it is by putting the, this is interesting, I put the line number, which is basically the line and type up top here. So we have that well, in this case, 1 through 10. 10 should go to the end there, but I didn't sort it properly. So we have C1 through 10 up top. And then looking across, you'll then have D1 through 10 across the top. So that's kind of nice. It was kind of interesting. I had to play around with this one. I was doing something where because I have the account number listed there, I couldn't use the sum because then it like added up all the account numbers and came up with this like sum total of the general ledger account numbers, which didn't seem to work. Then I tried the count of it, so that was kind of interesting. But what I realized was that the average worked the best, because it was ultimately taking the account number, which, in this case was 20,010, and if there were 10 occurrences of it, it would then divide it by 10, so it got me back to the 20,010 as my account number. So as you'll see here in the spreadsheet that I'm sending you, you'll see the line and type up top, the journal entry number here, and the accounts within there. Last but not least, I copy and paste out that pivot table, okay? I copy and paste it into Excel, so it's not a pivot table anymore. It's now data. It's just raw data that I can play with. And I create a calculated field way over here, which is called my key. And the key is the addition of all of these columns here. So when there's like a blank space, like an underscore, that means that there was a blank account, and there's probably like many of them in like a long line. Like one space would obviously kind of look like that, and 20 spaces kind of looks like that kind of thing. So you can see there's a lot of blanks in here. But what this is doing, because of the way we've sorted it, because of the way we've put it together, is now this is the key of your journal entries. This is your account sequencing. And if I summarize on that key, now that I have my journal entries laid out this way, if you've followed us through, I can then summarize on that account key and determine what are the 450 journal entries that have that key. So I can go back in here even from a static point of view and say, well, filter on it being this key here. Hit OK. And now I have the whatever 450 items that are associated with that particular key. Now, again, long process here. It's really not that hard, and hopefully this template will make it a lot easier for you to utilize this test. But the reason I run it is for two reasons. One, again, getting a sense of the entire population is always useful. And again, if you had the time to sit down and even look at the top, I'm going to say, let's go down, how many did I go here? 50, 80. Okay, let me say 50. If you just even took the top 50 entries and just talk them through with somebody, just to even understand the nature of it, like you sit down with someone in accounting, I'm now looking at about half of my entire general ledger population, which is, tens of thousands of transactions. I could talk to someone about 50 of these over maybe 2 hours, and I could get understanding of 50% of my general ledger. Likewise, I want to look at those journal entries that only happen once. So now what I could do is I could filter this. Let me go back to this and put a filter on it. And I could say if my count is equal to 1, and what do I want to do? Let's take a look at like the largest guy. Oop, maybe I didn't do that. Oh, I guess it is right. I was looking from largest to smallest, and without the commas it looked wrong. But what you're able to then do is start to take a look at, actually, I may not have totaled up the right total here. I think I may have totaled up the account numbers here. I apologize about that. But in doing so, the goal of all of this ultimately is to get back to what is the dollar amounts of some of these unique journal entries. And I have found some fraud in this area where I found unique journal entries that were high dollar. You can even go to a point of saying I want to look for ones that are rounded, so rounded journal entries that are unique. And this provides just a great audit test, and just looking at what is unique in our processing, and there, like we said many times, what is happening a lot in our processing and why. So that should help your control understanding and hopefully help you to even write better control tests for that organization, because as you look at these accounts that are being posted to, you're kind of getting a sense of where your risk may lie within that organization. All right, so just concluding on the day here, I just gone through every one of the tests that we would normally go through as part of it, and ultimately trying to get back to this, which was my original vision of having that data mart. We talked about data marts and best practices around this, and setting up a scoring model of even identifying, say, the top items to look for, which you could send down to management and say, we kind of kicked the tires and we found these 50 items. Why don't you take a look at it? They're running, hopefully, their own local analytic toolkit where, they can make sense of what you're sending them, and hopefully, appreciate the sample you selected, as well as improve their operations based on testing that they're going to do in that particular area. So again, coming back to that vision, I now wanted to just talk through some of the free files that you're going to be getting as part of this webinar. So we talked about the Procure to Pay questionnaire that I showed you before, and that other one on cost recovery. So that's based on my cost recovery book, which is linked there. We just talked about that journal detail test a second ago, and that's also going to be provided to you. I have an Excel, using Excel as an audit software white paper. It's free, it's a bit old, but it still works, and is something where it helps you to think about, how can I run all of these tests within Excel? I then am sending you the scoring type activity that we've talked about, and kind of that chart that pulls it all together. And Active Data, which is a product that we just showed you, you can pick up for $199. It's very discounted. I think it's at least $100 off the list price by clicking that link right there. You're also going to get access to Audit Software Videos, and Audit Software Videos is a website we'll talk about at the end here, but you're going to get access to 6 hours of programming. Beyond, you're going to get this whole webinar is taped, and we're going to post it to Audit Software webinars or videos that you can take a look at. But you're also going to get these 3 courses, and each one of them is 2 hours. It goes into transactional scoring, into Active Data for Excel, into how to save millions for your company, and these are hopefully going to expand on your learning for the day. Last couple of things I wanted to show you are a couple of Excel tools that could be useful for you and hopefully help you in your processing. One of them we talked about is a process of importing data, and how, importing data, if you can just, if there is an ability in importing data to improve that process and make it quicker, you can have more time for your actual control testing. So if I enable this content of this item, import data files v2, what it does is it adds an add-in, and you're going to have this import file add-in. So it's in the add-ins menu. You'll click on import files. It then asks you for a folder, and I'm going to go to my AuditNet 2013, September 17th. I gotta really go down. So this is the combined tool example, and I'm going to give you these files so you can play with this as well. I believe this is 3 general ledger files that I'm going to put together. So I'm going to say, okay, look in that folder. I hit the OK button. It does something. It basically took 3 files that I had in this folder, General Ledger Book 1, Book 2, and Book 3. And what it did was it put them all together, which is kind of useful. I mean, that was step 1. It then gives you a summary of what it did. So it says, I got this file. I started at row 1. I went to row 100. If you have multiple sheets within the data file, it'll put the multiple sheets in there. So if you have like 10 sheets of data in that one Excel file, it'll actually, have the 10 sheets. It tells you the rows, starting, ending, even tells you the sheet name that it came from. What I also like, though, and we built this, is a little bit of an import tool. Oops, sorry. What this does is it shows you the columns, header, and the assumption here, and most data files work this way in Excel, you normally have your header record here and then your data below. So assuming that's true, what this thing does is it actually tells you what was the header, but also what is the length of each field. So it kind of gives you an idea, like if this one here had 22 in it, I would say, okay, I must have an account number in there with 22 characters in it. But on average, what it's saying is that it's finding that the length of that field is 5, that there's 5 characters within that field. And I think it's true. Like if we go back to the data here, you'll see that there's 5 characters in the account number field. So, I mean, it does a pretty good job of it. So this was kind of a quick test. It's a quick macro, but boy, this thing could save you. I had one client that gave me 98 files to put together, and I wish I had this thing because it would have done it in 5 minutes or 2 minutes. And I think it's more accurate than what I could even do manually because all human error has been taken out of the equation. The last tool that we're giving you, it's a little bit off the beaten path of what we would normally talk about for control testing, but this could be useful for you. It could be useful in doing an examination of someone's hard drive or of their files. So let's. I'm going to enable this content. I'm going to create directory listing, and I'm going to select a particular folder. In this case, I'm selecting the 2013 webinar class that we just gave today, right? So all the files that are in there, I hit my OK button, and it came back instantly because there's like nothing in there, like there's only about 150 files in there. But what it does is it actually gives you a directory of everything, and it tells you the file path, the file name, the file type, the file size, when it was created, when it was last modified, when it was last accessed. And it's an interesting way of looking at your own data. I use this actually for 2 main reasons. One is to clean up my hard drive because I can sit here and very quickly sort from large to small and say, oh, that's where my big files are, and delete them if I need to. The other thing is for backups. You can actually bounce this file, again, beyond what we're doing today, but you could bounce this file with this path up against say a backup that you might have of the same directory. And by doing so, you're able to kind of say, well, what do I already have backed up and I don't need to keep on my laptop anymore? This would be another thing to do where you can actually do like a backup, what's new kind of a test. And again, maybe you don't care about these things, but I find it useful. From an audit perspective, though, this is a great way of finding all your files. And if you were doing an investigation of someone's hard drive, this would be a way to kind of look at not only the files they have, but also when they were last looking at things. So if things were happening in a certain time frame, you might want to look at files that were accessed during that particular time frame. Okay, so with all that said, coming back to the last polling question of the day, what active data for Excel function is used to effectuate the journal entry account analysis? So the ones we talked about, statistics, digital analysis, regression, or the top bottom items. So what active data for Excel function helped us effectuate the journal entry testing? If there are any questions, we're kind of in our final minutes here, so feel free to post those questions. Happy to get them. We're trying to get you out of here by that, 10 to 5 of range before the 2 o'clock hour, and we're, fully on target of doing that. So just I'm going to leave the poll open just another few seconds here. If you do have any questions, though, feel free to post them. I've answered all the questions so far. Okay, with that said, I'm going to close the poll and share that with everybody, and correct the top bottom items is the correct answer. Active data does it does everything but regression, but all those other things are done, and however, top bottom items is what we utilized. So again, I don't see any questions, so I'm just going to kind of move on. And note, what we have in the queue coming up. We for those ACL users, we have a quick start ACL training followed by the Learn to Effectively Script an ACL class. We then have a Kickstart Your ACL class, which is kind of the tandem class to this one. This one is talking about automating your control testing. It's not so much an Excel class. The Excel one is really about how to use Excel as an audit software and really showing you how you can turn it into like an ACL type product for all the limitations that it might have. And you can learn all about that at auditnet.org. One note here with all of these files and added bonuses that I'm sending you, it takes us about a week to get everything done, so bear with us. We load everything to the website, we set up links to it, and then we send it to you. And it'll take about a week to get that out to you, so I'm just noting that. And last but not least, Audit Software Videos is where you're going to get 3 classes that you're going to take, and I'm just going to show you what you're going to do when signing in online to this. Hopefully, and I didn't want start sweepstakes for sure. All right. And I don't know if my internet maybe haven't, oh, there we go. So with auditsoftwarevideos.com, what you'll do is we're going to send you a user access, and you're going to kind of click on the login button, and you're just going to enter in your user access, kind of like I am here. And when you do so, your username, oh gosh. I'm sorry. Bear with me one more second here. 17 minus 12. Hopefully that'll let me in. I thought I had the password right. If not, I will show you where to go if I can't figure out my own password. There we go. So it brings us to the course index, and you will not have access to everything. We do have subscriptions that you can buy that you can get them through AuditNet at 25% off, so it's a really good rate. But what you're going to be doing is you will have access to like the How to Save Millions class, which is March 14th. You'll have access to the transactional scoring class. So you'll click on this one here, for example, May 23rd. And excuse my internet, I think maybe because I'm doing so much today with the internet, it's just taking its sweet old time. Sorry about this, but what it will do is bring you to that class, and you'll be able to watch the videos. We do have subscriptions, though, in Audit Software Videos so that you can get access to 70 hours of training content that we have now in tools like ACL, IDEA, Access, Excel, and Active Data for Excel. What I kind of like about the videos and how we set things up is that we have not only the full webinar that you can watch, but you can actually go to things like calculating and combining the score, which is something that we talked about today as one of the lessons. And again, my website, or with everything happening, I think it's just taking a little bit of time. But it'll actually bring me right to that particular topic item so that you can watch a video that's maybe about 15 minutes on that topic. So you don't have to sit there and watch the entire webinar and kind of like your DVR at home when you're watching a TV program, go through the entire program. You really can kind of get it from, say, the 5th commercial break in the show. So in doing so, once you've done that, you just kind of go below here, you click the play button. We also have sample files that you can download, which are normally listed right about here. So you can just click here and download any sample files that you might need. All right, so let me head back here to my PowerPoint and conclude for the day here. But again, thanks again everybody for hanging on so long, and tried to get you out at 5 minutes of. So I think we're good timing wise as well.
Great job, Rich.
Yeah, thank you.
Yeah, this is great stuff, and I'm sure that everybody got a lot out of it. If you do have any questions, feel free to contact either Rich or myself. If I can't answer the question, I'll forward it on to Rich, and Rich can't answer the question, then we'll find somebody who can answer the question. One great thing about the internet. We do have another webinar coming up in October, as Rich pointed out to you, and other ones coming up in November and December as well. So if you missed any of these great webinars, just come back and you can go to the AuditNet site. You can sign up for these. We still have discounts available for signing up for these webinars. And I just wanted to let everybody know that AuditNet is just in the process right now of launching mobile applications. So you can now go to your Android device and you can download an AuditNet app for the Android, and we'll shortly have an app for the for iPhones and iPads and other devices as well. So you'll be able to access and get sign up for webinars, for events, sign up for AuditNet subscriptions. We'll have links to auditsoftwarevideos.com. So you're no longer restricted to doing it from your office. You can now do it on the fly. So
Great.
thank you very much, Rich. And
yeah, thank you.